All right. What's up, everyone? Nice to be here with you for our favorite monthly webinar. We have Tom Sosnoff back. I love talking about him. I love talking to him. I love what we learn from him. I'm actually trading really well. My strategies have trained so much because of what we do. I already see a lot of comments on, which is fun to come into. Real quick, how many of you this is your first time on? Let us know right first if it's your first time hearing me and Tom, or if it's more, you could just put the plus sign or something like that. I'd like to know. But I don't know. It's been interesting watching these markets grow up with you, Tom. Like in terms of grow higher, like this is the craziest bull market, new highs all the time. I don't know. I guess I resent the fact that I'll just throw this statement out and go from there. I wish I started trading in 2009 because then all I would have to do always is average down and buy more. But I started trading in the 90s and I saw the tech crash. I saw the 2008, and it made me stop believing in straight up, and it always kept my guard up, and I feel like I'm at a disadvantage. What do you think?
I completely understand. Hey, I have a similar problem because I started trading in the early 80s and I was trading through the crash of 87 and I couldn't sell a put for the next 4 or 5 years. So it's like it totally skewed the way I look at markets. I mean, I didn't understand skew back then and I couldn't sell a put forever. So yeah, I mean, if I started trading in 2009, like a lot of the millennials that we have working for us, they're like, why wouldn't you just buy every dip? Why would you ever do anything other than buy every dip? Every time there's a down move, just sell puts.
I still remember when I was like, I had switched firms, like day trading firms, and this guy, Kurt Kasazian, I wonder what happened to him. Anyhow, I like everyone used to yell out on the trading floor what they were doing. And like, I'm buying this, and I yelled out like, I'm short Yahoo, and everyone like stopped, and Kirk's like, don't get short ever. And you know what? He was right. He was right. I mean, individual stocks obviously are different, but like the market is crazy. It just doesn't stop, which hurts volatility. But I mean, the stuff we've gone over has really helped. And what I always emphasize, and I like talking about the trading setup, the plan is, we're looking to collect premium on most of our trades. Typically when we're selling, right, we go out, we want to sell at the 30 delta that hasn't changed, right?
I mean, I'm a little bit below that. I'm probably like in the 20 to 25 range most of the time. I like anywhere from 22 and a half is kind of my sweet spot, but it really depends on the size of the stock. So like if it's a cheap stock, you're going to sell a bigger delta. If it's a expensive stock like Costco, using it just because they had earnings this afternoon, you might use the smaller delta. That's all.
Well, this is interesting. You sell below the 30, but you sell naked. So yeah. You're going to collect more premium. We're doing credit spreads, which I think is why we lean a little bit higher.
I totally agree with you. You have to lean a little higher, especially if you want to collect like a decent credit.
And then you go out, that 30 to 40 day window is still the sweet spot.
Yeah.
Yeah. And then I guess let's just go over closing the trades again. Like I'll give you, we actually sold this one naked. I'll give you a trade.
Sure, give it to me.
JMIA. It's the
JMIA.
Yeah, Jumaya. It's the Amazon of Africa. Okay.
Never heard of it.
I've been trading it a lot. It was at 13, and after earnings, it went down to 5. But when it was at 13, it was moving back and forth a lot. Like it moves.
Okay.
So when it was trading at 480, we just keep selling puts because after it got hit with earnings and then settled in the 4 to 5 range, we just started selling the 450 puts every week, like every couple of weeks, collecting premium.
Okay.
So and it's pretty good for a $4.50 stock. We sold the November 15th 450 puts for 50 cents. Okay, while I was trading at 480. That's that's I think a lot of premium for a $4.50 stock.
Yeah,
Um,
I mean, well, it has crazy high volatility. You see it up here in November, it's 106. So, yeah, with the $1.47 expected move over the next 50 days, that's a pretty big move for a $5 stock. That's all.
so now we get the move today. It was up 55 cents. I didn't even see if there was news. But the the premium, I guess it actually hasn't gone down that much. But like yeah, I guess is that something like as it gets further away, do you always take it off early? Is there like a buying power thing, or are there some times where you just let it go
No,
to zero?
no, it's not a buying power thing. It's usually the model that we use to close out like a short put would be would be very depend on the amount of profits that you make in what period of time. So at 50% of max profit inside of, let's say, 24, 25 days, that's a no-brainer for us. But there's also times when you get a really quick move in a stock and you can take 10, 15, 20, 25, and even 30% out of a short put trade in a day or a couple of days or a week. And then for us, that's a no-brainer just based on percentages. But we have kind of like this scale that we use, and anything up to 50%, you always want to default to closing a trade earlier rather than waiting later. Our default is always when you're in doubt, just close it, take your profits, move on, and don't worry about it. I mean, so you leave a little money on the table sometimes. Other times you're going to forget you closed it, and you're going to just, you're going to wake up and the stock's going to be lower, and you're going to be like, oh, I had a winning trade in there. Like it works both ways.
Yeah, for sure. Um, it's interesting because last time when we were finishing up, we were talking about Palantir, and you were giving it as an example of something with bullish skew, which
Yeah.
which you said it wasn't. It didn't mean that the stock is going to go up. You just meant that it had the potential for a squeeze. Is that right?
I wouldn't say squeeze as much. In the case of Palantir, what concerned me about it was it had the potential for like a meme stock to me. There's not a lot of stocks where I think about them as potential meme stocks, and Palantir was one of those. I think the last time we were talking, it was like maybe high 20s or low 20s. I don't remember where it was, mid 20s, high 20s, something like that. And what scares me about Palantir is it just has that kind of that look in its eye type stock where I wasn't even concerned about the downside. I have no Palantir position on. I should also make that really clear. I have nothing on in there. But it was the kind of stock that scared me to the upside. And I think that my intuition was right about that one. The risk was to the upside. Sometimes when there's a lot of call skew, the stock goes up, but that doesn't mean the stock's going up. It just means the velocity of risk is in that direction.
So that doesn't, and I know the answer, but I'm just saying it because I think a lot of people were thinking when you see that skew, it doesn't tempt you to try to get involved because, like, how do you stay away from those temptations where you think like, oh, this could happen, and there's so many thoughts with the market where some days you just wake up and you're like, I want to make a lot of money. What could make me a lot of money if I'm right? And like, that's not when I trade my best. I'm thinking the opposite. I'm thinking, how do I take a little bit of premium that's like an 80% chance I'll win and grind? But how do you stay away from the focus?
So the first thing is just to point out to everybody what you're talking about with respect to skew. So the stock closed right here where this line is. It closed at, you can see right here, 37.08, but 37. If you go 5 points higher, the calls are $1.30, and if you go 5 points lower, the puts are 96 cents. So there's about 30%. The calls are about 30% higher than the puts, and that's what skew is. Okay, that's all that means. That just means that the marketplace is pricing a premium in the calls, not because the stock's going to go higher, but because if it goes higher, it'll go higher faster than it goes down. That's the whole reason. So to get back, Adam, to like, what's your question again about what's your question?
So, and thank you for going over the skew because I think it was good to explain this. Does anyone look for that, by the way? My question,
Yeah, go ahead.
My question is, when you hear, oh, it could be a meme stock, there's more chance that if it goes higher, it's going to go up faster. Then there's
like what do you said something to the effect of like, are you
like
looking for
gambling versus it's like I tell people, hobbies you lose money on. when you trade, it's a professional thing, and the goal is not just to have fun; it's to make money. So it's not like betting on a football game, where the vig is to the house, not you. And this is the opposite. When you collect premium in an options trade, you are the house. You have the advantage. So I guess that answers it a little bit. But like,
I'm never looking to answer your specific question from before. I'm never looking at how much I can make, but I'm always looking at making money. So in other words, I'm not concerned. Like, let's just say I sold this strangle, just as an example, 5 points higher on the calls, 5 points lower on the puts. If I sold this strangle, I'm not worrying about the fact that the calls are more expensive than the puts. If I was, I would just raise the call strike one, or I would, raise the put strike one. I could do either one of those two things. If I was really worried about like some pricing inefficiency or one side being, skewed or lopsided, I'm not worrying about that. When I sell this strangle, I'm also not thinking about how much money I can make, and I'm not thinking about how much money I can lose. I'm just trying to decide if this is a good trade on its own. And the reason I would disqualify this trade right off the top is not because it's Palantir. It's because at an IB rank of 7.6, I don't sell premium. And I don't sell premium if this number is under 30, because this measures the implied volatility against itself. And which means that right now, this level of premium, this $2.26, is ranked 7.5 out of 100. That is not rich enough for my blood. And in order for me to make money, I know that this is going to be, if I sold this strangle here, I'm going to have a hell of a hard time making money. It's going to be a grind. If this number was up in 30, 40, 50, it would be a lot easier to make money. Just to give you an example, let's look at a stock that had really high implied volatility rank today, Costco. It went off at 70 because it had earnings this afternoon. That's a much different situation. Or you can look at one of the Chinese stocks, say like Baba, that had a big, explosive up move, but it has an IB rank of 81. These are stocks where the premium levels on a scale of 1 to 100 are at the top end of the range, so they're attractive to me. Getting back to Palantir, PLTR, it's not attractive to me because of this. You could trade the stock still, but it'd be different kind of strategy.
Wait, I'm writing this down. I didn't know this. So this is something new we're learning today. You don't sell premium unless the IB rank is above 30?
Yeah, so let me give you my IB rank based on all the research that we've done for the last, 13 or 14 years. The ideal IB rank you'd like, because you're never going to get like 100 and you're not going to get 80s very often. Ideally, you'd like plus 50. It'd be 50 or higher in the IB rank, which is just the last 52 weeks of implied volatility measured against itself. You would love plus 50. You'd like at least 50. If it's 30 or higher, it's okay, because that's 30 to 50 is kind of like it's tradable. It's not the best, but it's tradable, and it's definitely means implied volatility you have an advantage in implied volatility. Over 50, your results are going to be significantly better. Under 30, we don't open trades. The 20 to 30 area is kind of like no man's land. If you were desperate, you could, but we really don't like it, and we probably wouldn't close it there either. But if IB rank gets below 20, we consider closing the trade. If IB rank gets below 10, we're out of the trade. We don't keep trades on with IB rank below 10.
Close below 20, maybe definitely below 10.
Yeah, so below 20 is a consideration to close. Below 10 is a close. Between 20 and 30, you can still roll forward or adjust or do whatever you want, but we don't open new trades there. But we don't close.
When I'm looking these up, like it seems like all the big names are 26. NVIDIA's 26, Apple's.
These are all post earnings trades in an environment now where a lot of the IB ranks have come down. But one of the cool things about Tasty is you can go to this list of icons here. You can go to the watch list tab, like I'm clicking on right now. And in the watch list tab, you can click on something. You can go to and choose in here like liquidity, and you can choose high option volume. And then what you can do right here is you can actually put these from low to high or from high to low. So if you want to see implied volatility rank, now remember, during the day, it can go to any number, and after the close, we kind of cap it at 100. But KWEB, which is a Chinese stock, up to 120 today. FXI, 100, another Chinese large cap, 113. Tesla at 98 because they have news binary event coming this week. UPS, Intel still really high at 88. So there are a lot of stocks up here. Boeing is up here. I mean, there's a ton of stocks when you kind of look at this list. And
so you go to Tasty. You go to Tasty. Show that again on the top
I'll
left.
show you again. So let's say you're just on a trade page like normal, okay?
Yeah.
You just go down this list of icons here, and you go to the second one, which is, it says watch list.
Yeah.
And you put your cursor over this. You have news, all these different things. But the watch list is the second one. You click on watch list. When you get to the watch list, you just go to this drop-down menu here at the top, and we have all these different things like Tasty List, crypto, dividends, all this different kind of stuff. You go to liquidity, and we have high option volume, liquid ETFs, and liquid symbols. So we do the sorting for you. So I'm clicking on high option volume. And then when I get to high option volume, then I'm going to the IVR column. And when I go to the IVR column, this is interesting because you can do it a bunch of different ways. You can sort just in any random order. You can sort from low. These are the lowest IV ranks. Like Reddit right now is 0. Mara's 2. Like none of these stocks I would be short. Chewy is 5. I would have no interest in this. Palantir's right here, 7.6. So GameStop at 8.2. I would not be short any premium in any of those stocks. Or you can click on it again, and it'll show you descending order from high to low. And all of these, every single one on here until we get down to the 30 level, which is, we're still not even there, right around here. This is the first time when I get to the point at Dell that would be the last stock that I would trade to sell premium in. But all of these stocks, which is hundreds of them, are all high option volume stocks that would be acceptable as premium selling candidates in my world. Not everybody's world, but in my world.
Wait, that's really cool. So that's like a great way to find stocks that I didn't even know about.
It's the best way on Tasty. That's how we all do it. It's you can use high option volume, but again, it depends what you're looking for. If you want, like if you're looking for liquid ETFs or liquid underlyings, or you can put all your own positions on here. Like, you can look at your own positions. Like these are just positions that I have on. So I look at all my positions and I literally have positions in every single one of these stocks. And you can see over here, so I just scan my own positions to see, make sure everything is high implied volatility rank. Now I'll get to some point where they get a little low down here, and there's certain things that I kind of need to take off, but they're probably just like long stock. They're not like short option premium plays. But as you see, once you get under 10, I really have nothing. And everything is usually in the 20s, 30s, and up over 50 to 100. Because I'm very careful about keeping my positions in extremely high vol underlyings. Again, then you go back to this. I don't need to see my positions. That's an easy way to sort through your positions. Go back to high option volume, and you can sort that way. And one of the things that we built into Tasty was the ability to go through multiple watch lists without changing your core screen layout. So that was that's the reason we built it this way. So you never had to change so you never had to mess up anything in front of you. Everything always looks the same. Just click back and forth.
So, but now, like KWEB, I see doesn't have earnings. Do you prefer to have these stocks with the high IV and not an earnings announcement coming out? Because doesn't earnings make it more gambling than a non-earnings?
Yes, I prefer non-earnings, but sometimes you can see a stock that will have heightened volatility, weeks ahead of its earnings, or weeks ahead of a binary event. But the answer to your question is yes. We much prefer to be in a situation where it's not earnings related. Now, remember, when something has incredibly high volatility, the chances are that the reason they do is something's going on in that stock. If I go back to that list just for a second, and we look at these high option, KWEB had, obviously had the Chinese stocks blew up today, but every stock here, Tesla, is in the middle of about to have a binary release the next day or so. Intel is a takeover stock right now. Boeing has its own strike issues and everything else. So every one of these stocks is in play. But you can get down here to, stocks like GLD. Well, gold's not in play. Gold just made new highs. So Costco here is the only stock with earnings tonight. And, so that's something. But there's stocks here that are really high implied volatility rank, like EEM, which is an emerging market index, GDXJ, which is junior gold miners. So there are plenty of stocks in here that are not earnings related. Netflix has nothing to do with earnings right now.
Oh, sorry.
So there are plenty of stocks here with no earnings story. FCX is a copper story. So, clearly there's plenty of stuff to do here. That you can quick scan for, and then you're right back. We simplified everything on here.
Lots of comments coming in. Lots of comments. That's awesome. Learn something new every time. I have some questions coming in. How do you choose the right high IVR stock to sell the options on? And
well, the answer to that's a great question, because the answer is nobody knows. Like you can avoid certain binary events. Like you saw Tesla up there. If you don't want to deal with Tesla and their robo-taxi rollout later this week, then you avoid it. If you want not to deal with, some kind of binary event like Costco at earnings day, you don't want to deal with that. That's totally fine. So you avoid those situations. But in general, just because something has high implied volatility rank, it's there for a reason. And so you just have to recognize that, you're not stepping into a landmine by any stretch, but you are stepping into a situation where the marketplace is assigning risk for a reason. It's not, you didn't just discover something and you're the only person that says, oh, wow, this is too high.
Right.
A lot of times, nobody really understands fear. Fear is not something that you can necessarily, it's quantifiable through option prices, but it's not something that is easily explained. So you can work around that discussion and you can rationalize making trades.
I mean, this is, I didn't even know. See, because we've gone over stock sources. I like this. This was good because
good.
I don't know how we stumbled here, but I'm glad we did, because it's a great way to come up with trade ideas, which is important, especially in a low volatility environment. Dan said, my question for when you get is when I'm in a good options trade, let's say long calls, and I think the current move is done, but believe the stock is going higher. Well, that contradicts itself. How do you think the move's done, but the stock's going higher? Anyhow, what's the best way to extend the trade? Later dated calls with decay loss premium, so always unsure what to do next. Currently selling and waiting for re-entry. Just wanted to ask if there's a better strategy. I will inherently miss so many because I don't trade all day. So I guess his question is, I'm in a good trade, feel like it's time to close it out, but I want to stay with the stock. How do I stay with the stock?
So Dan, there's always, that's Dan, right?
Yes.
So there's always like some synthetic, option trading and derivative trading in general, it seems like it's very complex, but what Adam and I do is try to simplify this, and make it seem, it's a lot more practical than it is complex. And so let's use an example here. Let's pick a stock, like let's go back to Palantir because it's a cheap stock, PLTR. And let's say, for example, that I'll go back to that strangle that we talked about before, the 42.32, which is $5 around the at the money. And let's say, Dan, you had this position on, and let's say that, no, you know what? I'm going to change this. I'm sorry for this. Let me do this. Let's say you're bullish in Palantir, and let's just say you were short puts in there, and let's say that your short put position, it's working, and you say, I'm going to take this off because my position's working, but at the same time, I don't want to be completely out of this trade. So there's a couple of choices here. Now we can do this with virtually any kind of trade, but I think I'll show you with short puts first. So the first thing that we decide to do is we cover these short puts. So now we have no position on. Okay, you made your money on your short put, but you still want to be in Palantir and you still want to keep long delta. So what you've learned from Adam is the next step is take less risk, but keep some long delta on. So you turn around and you sell a put spread. Okay, that's totally reasonable in this case. It's defined risk, and you have a much smaller credit, but you still have long deltas. So if Palantir goes higher, You've replaced your short put with a put spread and limited risk. That's one thing you can do. The
What's
next thing,
long? Sorry, long deltas. It gets a little confusing because you're selling
okay,
a put, but
so,
then
so
you say long delta.
your original put, your original short put is, if you sell a put, remember that is a long, that's the equivalent of being long shares of stock. As you can see here, we're going to do this one put. This one put has the equivalent of 30 shares of stock. And you can see over here it has 30 deltas. So every time you sell a put, you're effectively theoretically long stock. If the stock goes higher, you make money, you take off your short put, and then you say, what do I do next? Well, maybe I'll sell a further out of the money. Maybe I'll sell a further out of the money. Oops, sorry about that. Maybe I'll sell a further out of the money put spread. So I'll move the strike down one and I'll sell a put spread. I'll collect a little less money, but you know what? I still have long deltas. So instead of 30, now you see here, I have 8. So that's totally fine. The other choice to do is you're originally short, in this case, you're originally short the 33 puts, you made your money. Now the other thing to do is to right click on this. I'm sorry, the other thing to do, I don't have this position on. I can't roll it because I don't have the position. But if you have this position on, you would right click on this and that would give you an opportunity to roll. And what you do is you go out to December and instead of being short the puts, the 33 puts in November, you go out and you sell the 32 puts, one strike further out of the money in December. And what that does is this spread virtually doesn't, you don't give up anything except you move further out of the money and you're long less shares of stock. Instead of 30, you're only long 24. And if you don't like the 24 shares, you move it here and you're long 20 shares of stock. So effectively, because I can't show them on the platform, Adam, because I don't have a position on it here.
Yeah.
But what I'm doing is I'm rolling out and I'm diagonalizing the roll so that I'm going from November to December and I'm reducing my delta by 30%, 35%, 50%. So I'm taking half as much risk theoretically, and just by rolling out in time. And so I'm taking my profits in the front month and I'm reestablishing the position in the back month. And I'm doing it either as a diagonal spread or as a short vertical spread in the same month. Now, one last example is a lot of people that are listening today probably when they're trading, they might, for a trade like that, let's say they're bullish in Palantir, they want to do a covered call. So they buy stock like here and they'll turn around and they'll sell a November call, right? That's a typical covered call. You buy stock, you can see I'm buying 500 shares. Let's do 100. I'm buying 100 shares of stock here, selling one call. That's a classic covered call. You're selling a 35 delta call, you're buying 100 shares of stock. Let's just say that trade works out, right? And goes your way. So you make a couple of bucks on this trade. So you close out this trade, or you make a buck on the trade, or whatever it is. You take your profits on this trade, and you turn around and you sell an out of the money put to stay long deltas. And that's how you replace a covered call. You go from, like, let's just say a 65% probability of profit trade, of which you've already made money, into, in this case, an 80% probability of profit trade. I'll move this down a little bit, go to 80%, or let's say 85%. So you go from 65% to 85%, and you put up a lot less capital, and you've replaced your covered call with a synthetic long. And so that is the beauty of using options, is you can always replace what you have on and take less risk, take profits, and then if you have a winning trade, reestablish another position synthetically with less risk. Sorry if I confused everybody.
No, you know what? To that point, I just wanted to say I love what you just did, because it feels like a classroom. It literally feels like a classroom where you're speaking and we're learning, and you're speaking at a very fast pace. And some people are like, I'm going to fail this test. And other people are like, I think I get most of it. I got to go back look at it. And some people just get it. But everyone's growing by listening to this. And even if you're like, I'm going to fail, you're not. And you're going to hear these things. And I've been speaking with Tom for the last, 4, 5, 6 years. And I'm learning stuff new today. I'm writing stuff down. I'm feeling like a student, which is awesome. And so it's hearing it. It is the repetition as you grow. And why I'm really happy today is because the evolution is when you're asking new questions that are taking a conversation in a new direction, it means you're growing. You're not rehashing, you're growing. When you stretch, you grow. So this is really good. And by the way, the chat's gone. Anthony from your team is he was. I was watching the chats go through, and so Neil was asking does IV rank change daily, and then Anthony gave the formula used to calculate it on the platform, which is IV rank equals current IV minus 52-week IV low divided by 52-week IV high minus 52-week IV low. Okay.
And it's real time. So not only does it change daily, it changed tick per tick. So it updates in real time. So it updates every time there's a move in volatility in the underlying. So it is not something it's not static. It's a completely dynamic. And yeah, Anthony is on from the trade desk, and he's very clear of the concept and will answer everything in real time. That's why we like these chats.
Yeah,
and Brit's on too.
If you could chat that out to everyone, because I know you responded to Neil, but I just want to make sure everyone saw it. But then he said, if you're interested in tracking a chart on how IVR has changed, you can type in the symbol.IVR, for example, apple.IVR. Is Palantir.IVR you're doing?
Yeah, I'm going to do it right here in Palantir for you. Hold on 1 second.
Relax.
So this is your Palantir IVR charting.
We discovered another planet today.
Yeah, so this is charting Palantir IVR. You can see it's kind of on its butt right here, but that's because it's down to whatever we said before, like 9.7 or something like that. But yes, you can type in any symbol, IBM, PLTR, whatever you want, and you can type in to see, IVR. Like we talked about before, I just said, BABA.IVR, because the Chinese stocks have exploded. And so we do that, and you can see the BABA IVR has jumped up right here. It's up into the 80s. The other thing.
So, I mean, you when you see this IVR exploding, I mean, you want to be collecting premium.
Yeah, you definitely do. And you can also, on Taste, you can also view options in the chart. I don't know if you know that, but that's another choice you can do. So if you want to see an individual option, if you're interested in that, you just right click on it and you can choose that. But typing in PLTR.IVR, that's,
Is this new?
No, been there.
How have we never discussed it? If you're on this call, if you're on Tasty Trade, let me know if you knew this until today. I'm curious, yes or no?
You just right click on it and it'll say view option and chart. You can do that.
Let me know. Wait, what do you do there?
Just right click on any option and you can view option and chart if you want to. So I don't use this feature, but some people like to see charts of options. So it will chart out every single option if you want to do that. And again, if you wanted to see the IVR, just so we're clear about this, IBM.IVR, here's IBM's IVR. Let me put up the chart. There's IBM's IVR. You can see IBM's IVR has been climbing. So it's rich. So IBM is very different than PLTR. And, we like selling this. We don't like selling PLTR.
John's saying he knew for years and he told me about it once. I don't recall.
I believe John.
No, new. A lot of people didn't know about this. This is cool.
But you saw the IVR in IBM pop up, and here you can see the IVR is 78. That's why it's so high. And look at this crazy move in IBM.
And if anyone hasn't checked out, obviously, Tasty Trade yet, Patrick, just throw out a link if anyone wants to try it, because I didn't know if we've done that. So just make sure you send out a link. I use option charts. Thank you. Wow. I mean, this is really cool. I learned a lot of new stuff. It's great. I'm really happy. Let me ask you a question, Tom. This is. Well, I want to come back to this, but I had this written down. I was just curious. How did you? This is more of like an origin story, a little bit.
Sure.
Because you're very like, this is how I do it. There's no wavering. There's no sometimes or it's very consistent and even keeled your answers. But I can't imagine you were always that way. Was there like a shift where you're like, no, from now on, I'm a numbers guy and I'm doing it this way? You're like, what was the origin of you going down this deep rabbit hole of like the math of options versus feel, momentum, stuff like that?
The genesis of it was the creation of Tasty. So back in the day when we built Thinkorswim, um, we were just taking all that we had learned, from 20 some odd years on the floor, to build the technology, because we knew we really wanted to build very cool front end technology, and that's what Thinkorswim was, and that's where our real focus was. But we, at the time, we still had a lot to learn about, customers who trade and people that like to use, derivatives, and there was just a lot for us to learn, and we really didn't know what we didn't know. We knew a lot about the professional side of the business. We didn't know anything about the retail side, and so it took us about 10 years, to build the technology that ultimately became Thinkorswim, and also the a lot of the logic behind it and the GUI and just the look and feel and everything we wanted. The reason we built Tasty is because we knew we missed something, and the missing piece was the content, because eventually technology can be somewhat commoditized. Anybody can route an order in 50 milliseconds, 100 milliseconds, whatever it is, and anybody can build a layout. I think some are way better than others. I think ours are, have way more logic than anything else. But it's commoditized. What you can't commoditize is the content. You can't commoditize what I do. You can't commoditize what you do. You can't commoditize all the research that we've done. It's impossible. Even with AI, even with everything else, there's too much about it which is personal, and there's too much about it which we needed. We knew something was broken in financial media, but we didn't exactly know what it was, and it's taken us 13 or 14 years to figure out how to optimize research and quantitative, statistical studies, probabilistic studies, quantitative studies, and it also costs a lot of money to have people do this every day. We do 60 plus 60 65 hours of research a day with our team, and that's almost 7 man hours. It's crazy. I mean, 7 people all day long, every day. So it's a crazy amount of research.
Have you ever pulled like a listener in because you liked to join your team because you liked the way they were asking questions or participating or anything like that? Like, did you ever discover anyone
Yeah,
not through traditional methods?
sure. Dr. Jim, who's been with me now since 2015, he was a professor at a teaching an MBA program in North Carolina, for a University of North Carolina, and he was a listener, and he bugged me for about a year, and I finally hired him, and because I don't like going outside of our world, and so he's one of he's one, and there's somebody that runs our trade desk, Jason, who's been with us probably 10 years now, or since we started, Tasty, and he was a listener, and he came on board, and so loved the whole thing here. So yeah, there are definitely some people, definitely a lot of interns, but there's definitely people that we bring on board for sure.
That's awesome. So you never know, guys. If you listen and you ask good questions, you could call your shot. You're back to live speaking now too, right?
Yeah, I've been on the road now for all of 2024, and I'm actually in the middle of like a huge tour. We were in I was in Mexico City and then Miami last weekend, and next week, let's see, my next show is New York, LA, Dallas, and then I'm doing 5 cities in I'm doing Edinburgh, London, Manchester, Birmingham, and Dublin. So I'm doing 5 cities in the UK and Ireland, to launch this software that you're looking at now in the UK.
Jake said Phoenix in December.
And Phoenix in December. And after that, I'm taking a little time off going on the road because I'm killing myself right now. But I feel like there's a lot of people we want to talk to before the end of the year, so it's good. Yeah, we'll be in Phoenix in December.
Lisa's glad you're back on the road.
Yeah, I love being on the road. Like every time I'm out there, I love it. It's my absolute favorite thing to do in this whole industry is go on the road and talk. It's just you know what it's like. You travel every it can wear you down, man. I don't want to eat any more meals in airports or airplanes. I'm done with that. But the rest of it, I love.
Well, you're still one for one with me. We went out to dinner when you were in New York, and I'll never forget it because you're the only one who's ever done it. You literally ordered one of everything on the menu. You said, "Bring it all," and I'll never forget that. And I thought that was the coolest
I just want everybody to know it wasn't just me and Adam.
No, it was not.
There was a large group there. It wasn't just the two of us.
It was. I love that move. It was very cool. As I'm looking through that, we'll taste it. Do a professional traders? AG said, do professional traders use the option chart for the individual strikes when they are day trading, short-term trading?
No, absolutely 100% not.
Okay.
I've never seen a professional use an option chart in my life. I don't think it's there to use it for technicals as much as it is just for context. So no, I've never seen a professional use an option chart. I have seen professionals use implied volatility chart. Remember, there's a difference between option prices, stock prices, and implied volatility. Price is not mean reverting, but volatility is. So I have seen professionals use volatility charts, whether it be IVR or implied or just implied volatility. But I have never seen a professional use a price chart in an option price chart.
Triple witching, quadruple witching, witchings, are they too efficient now for an individual user to take advantage of that?
Yes. I mean, when you say too efficient, I don't think anybody can take advantage. I don't even think it's a professional. When I was a floor trader on the SIBO, which was my whole, the first 20 years of my career, we made 80% of our money on expiration week and most of it on expiration day. In 2024, expiration is just another day to me. It doesn't mean a damn thing.
Is that because of the algorithms?
It's not because of the algorithms. It's just because we have expiration every day now.
Okay.
It's the intensity of that one day, a month or one day a quarter is no longer valid. It's just expirations every day.
I think right now as a trader, the best trading days I've seen, and it's not always, have been for volatility, the Fed announcement, the post-Fed announcement moves continue to seem like, not because I think anything what they're saying, just because people wait. They make an announcement, and then the market really moves for the next couple of days. Do you see that too? Do you take advantage of that? Do you trade into after it?
I mean, I definitely trade.
But are you putting a trade on? Sorry, I know you're always trading, but are you more likely to enter a trade right ahead of the announcement or right after you see big moves post announcement? That's what I mean.
I'm more likely if you're talking about a Fed, I'm not likely to take any positions off prior to a Fed announcement. But if you're asking me, am I more likely to trade pre or post announcement? If it's to trade around it, I would say 80% of my trading is post. So I prefer to let the announcement come and then to either fade the move or do whatever. But I prefer post earnings announcement. Post Fed announcement rather than pre. Now,
are those shorter?
The last Fed announcement, I did trade pre-announcement, but I only sold bond premium. All of my equity trades were afterwards.
When you have that move, because it's so fast and then it seems to be over so quickly, are your time frames changing on the trade?
Yeah. Binary events, anytime you trade specifically a binary event, like a Fed announcement or something, like an earnings play,
right,
not have the same time frame. Your time frame is usually, next day, next morning, end of next day, your time frame is instant. Those are low edge trades, meaning they're going to trade very close to theoretical value. So your edge is going to be really tiny, if it, any at all. And so you're essentially you have to trade those trades on a shortened time frame. You cannot extend those trades.
And what about earnings though? Are those shorter too or no?
Yes, those are short term. There's no difference between an earnings trade and a Fed trade as far as the binary aspect to it. They're both binary.
But then what about something like Intel right now?
Yeah, you could do post earnings trade. Intel, I mean,
well, no, more of like a takeover kind of in play, something like that.
So the challenge in takeover plays, and everybody should be really careful about this. Once they announce like the stock is quote in play, because they've announced a deal or something, just be careful, because all of a sudden, once you bring professional ARBs into any kind of a trade, now Intel's a little different because there's really no announcement. There's just some crazy Qualcomm rumors, and I don't think it meant anything. But if you're involved in a stock like last one I could think of that maybe was U.S. Steel, where once the deal was announced and then the stock, it's had this massive move from 50 down to 25. Once the ARBs get involved and it's priced for a takeover, you got to be really, really careful. We do not trade stocks that are in the middle of a deal.
Okay. So what about, I remember like my favorite example was when, was it Yahoo that spun off Baba? Did they own a piece of Baba? Was it Yahoo?
When Yahoo
owned a big piece of Baba, right?
Yeah. Now, God, let me think about this. Yeah. Yes. Yep.
I just remember they were like talking about spinning it off, and they said it might happen over the next couple of months. And that was when I had first started selling puts. And I remember I just kept selling puts in Yahoo because there was this announcement that I knew was for months, and it just seemed like it was in a holding pattern. So sometimes when you know something is going to be discussed in a couple months, you feel like the stock's going to kind of just sit, and then you just collect premium waiting, or no?
I mean, you certainly could. I mean, you're selling the story a little more confidently than you might have been at the time.
Sure.
At the time you were probably a little more nervous that it might not play that way.
No, everything's small. It's just like that's what.
In hindsight, sure, I do that.
Positive drift.
That's right, positive drift. I do that too, by the way. I definitely take directional bets just based on my own subjective opinion.
Like, did you do anything with Paramount this year?
No.
Because that, like, every day it's getting taken over, it's not getting taken over, blah, blah, blah. And the stock sits between $10 and $12, but there's a lot of premium because they keep talking about it. That's an example, I guess, but you didn't do it.
Yeah, that's fine. Yeah, I haven't traded that stock. I prefer, those are not my favorite trades. But
what about Tesla with the...
I mean, I do trade Tesla all the time.
Tesla with what you were just talking about, the robo-taxis. Do you trade off that? Or?
Yes, I have. I was trading Tesla pretty good this year until the last probably 2 weeks. The last little rally in there, has hurt a little bit, but I gave a little money back. But I'm still short some premium in Tesla, and we'll see. I haven't done it. I'm still delta neutral, leaning a tiny little bit, a hair short.
Okay. At what point, and does it affect your strategy? Like, we're in end of September now, going into October. Do you just mindlessly cross over into the next year?
Yeah, especially, I mean, a lot of people say to us, what impact do you think the elections a binary event? And it's very hard to argue that the elections are a binary event. Statistics do not prove that out. I mean, obviously there's been certain years, that like 2016 where the elections proved to be a binary event, but most other years elections have not been a binary event. But there have been years, an election year like 2000 and 2008, where we've had huge moves, not due to the election, due to the market kind of crashing prior to the election. So I'm going to argue that, I just keep rolling forward with the flow. I don't really elections don't really change anything I do, or the year to year doesn't change anything.
But yeah, I guess just for like, yeah. So you don't mind crossing over into January? It wasn't really elections, like into the new year. Like if
Oh
it's
no. From you mean no. Not rolling into January, no big deal for me.
okay.
That's normal.
All right. Some people ask me about that sometimes. All right. Let me just talk about a theme right now, and I want to know. This is interesting. Okay. So last week, Constellation Energy reopened 3 Mile Island and signed a multi-year, multi-billion-dollar deal with Microsoft, with the idea that their nuclear plants would, um, facilitate their storage and data units or whatever. Right? I said that pretty normal, I think.
Sure.
So now you see, so now you start talking about nuclear, and we have in my community, a whole nuclear conversation, and I learned that nuclear is actually much better for the environment than solar or anything else. And the reason why people don't do it is because we've had those couple of disasters. So whenever anyone hears nuclear, they think it's really bad, but maybe the science is getting better. So then we start. Well, I won't even say what we start doing. If you hear like nuclear's in play and all of a sudden Constellation shoots up to the point where it's one of the top performing stocks this year, do you start looking at other stocks in that sector? Do you pay attention to that like as a catalyst for movement? Because they all become in play now. And I'm just curious what you do. And yeah, it's more important what you do than me.
I'm interested in this in the sector because because the like you said, I consider news and confusion and fear and excitement to all be catalysts for opportunity. So for me, that's a catalyst for opportunity because it just means higher implied volatility, that kind of thing. I don't actually. I don't care about macro and I don't care about stories. Like I don't care about the story behind it at all. I am probably the most indifferent. I'm indifferent to product more than any other person who's ever traded. I really don't care what the underlying is or what the story is behind it. I only care about, what's available. Is it liquid? Is the volatility high? Can I do what I want to do? I don't care why it's in play, if that makes sense.
No, it does make sense. But as a catalyst for an idea and something that's in play, like what we did was we made a list of the different nuclear companies because like it felt too late to get involved in Constellation when it was up like 50 points for the day. We just weren't messing with that,
Sure,
And, but then you see a lot of other smaller stocks that are up like 2 points or whatever and different prices. So I started trading SMR, which was New Scale Power, and like you, I don't even know what the difference between those two is. I just saw this was moving around a lot, but then as I'm going down the list now. So you have Constellation CEG, the IV ranks 39, SMR, it's 25. And then you get to CCJ, that's 20. TRP, TC Energy Corp, IV's 30. Are you looking for the highest one?
No, but it also needs to have volume. It's like this one would make me a little, you know what? It's not that bad.
So URA has the highest one of the ones we found. It was 45.
URA does have high. URA is a tough stock to trade. I mean, I've traded it in the past, and it's markets. Well, these markets aren't too bad. They're better than I thought they'd be. In November.
When deciding which one to trade, would IV be one of the biggest determining factors in saying I'm going to trade URA instead of TRP?
It would be, but you also need volume. So you got to make sure, like if it's trading 3 million shares, it's probably going to be somewhat, marginal. Like I'm looking at all these stocks and they're all wrapped around 3 million shares, but CEG is obviously way more expensive.
The URA, look at the 10, 18, 31 calls. That's a lot of volume, right?
Yeah. Yep. 1,220. Sure.
Yeah.
Yeah. I mean,
you're selling those. You'd be selling those, right?
I don't sell 35-cent calls probably.
Okay.
I mean, it depends. Unless I was doing a ratio spread or something like that. I'm not really, like I said, I haven't traded this stock in a long time. I did trade the stock, but it's been a while.
Yeah, that's interesting though, because when you're in a market that's at all-time highs, and so there's less volatility than normal. So when you have a sector that all of a sudden becomes in play, whether it's AI or nuclear or whatever, choosing which stock to trade, you're saying that volume and IV rank are going to be big factors. Ideally, having both of them.
I mean, you need volume. None of these stocks are super liquid, so you're going to have to probably wait a while to get filled at a decent price. And you don't want to give away trades, but I haven't spent enough time in this sector to look. The only one, I mean, I've traded CCJ, I've traded CEG, and I've traded URA, but I don't trade them very actively, so I'm not an expert. I mean, I just not that familiar with these stocks.
Yeah, no, I'm not asking for you to guide on those stocks.
No, I'm not guiding the stocks. I'm just talking about liquidity wise.
Yeah. So now let's along those same lines, just one more follow-up question on that. Like SMCI and NVIDIA,
Yeah.
right?
Yeah.
If you're in one, will you not be in the other? Because isn't it double the exposure, or would you trade both?
No, I would definitely trade both of these, and I have. The difference in these stocks is that NVIDIA is a 1 point wide, and SMCI it can be decent, and it can also be kind of wide. So SMCI you have to just be careful on, because NVIDIA you're going to get penny wide markets, and SMCI you're going to get maybe 10 cents around mid price. So, but now it's moving $50 a day. I don't blame the market makers. If I was making markets in there, I'd be $1 wide. That stock's moved $100 today. So, I mean, I'd be pretty wide in there too. But it's harder to get kind of a fair price in SMCI as it is in NVIDIA. That's the only difference.
It did move $100 today with a high of 484 and a low of 373. That's
yeah.
Cool.
I mean, it had a crazy range, but like when you look at NVIDIA today, it traded 300 million shares, right? And it's the markets in there are most of the day they're about a penny wide. They look a little wider right now, but that's just the end of the day. Most of the day they're trading in that range of about a penny wide. SMCI was actually pretty good today. I didn't trade it, but it was pretty good given how much it moved.
Was there news on it, or?
Yeah, the news was that they fudged the news is that it's possible that there's a investigation because they might have fudged some of their accounting. But I mean, it was a rumor. I don't know. I didn't read that much of it, but it dropped the stock like $100.
Wow. And then what's your favorite stock you're trading right now that you feel like just like, I know you don't really pick favorites, I guess, but just one that you'll keep finding yourself in?
Well, I definitely all year have found myself in NVIDIA, for better or for worse. I've been fighting that dog all year. So NVIDIA probably, I mean, I've definitely traded the most contracts of anything all year has been NVIDIA. No question about that. I would say of the equities, I'm pretty much, trade the most active, but NVIDIA and Tesla have been the stocks I probably traded the most of all year. NVIDIA, Tesla, AMD, and I'm going to say those three are probably 1, 2, 3. And then of the non-index products.
NVIDIA, Tesla, AMD?
Of the non-index products. Yeah, those three.
Lisa wanted to know, and then I know we're over there. Lisa said, what do you think of insider trading, et cetera? Does price show the same thing? Like, can you, like, is that what the question is? Yeah. I love Lisa. The question is, what do you think of insider trading, et cetera? Isn't it relevant because you could see it in the price movement, I guess?
First of all, I don't think insider trading is a big issue. It's very, anytime you ask a question, if you ask a question about fraud and, illegal things, it's very hard to comment that. It's not something that I think about or worry about. The marketplace, like NVIDIA, traded 300 million shares today. There's no such thing as insider trading in a stock like that. There might be, if you stick with liquid underlyings and liquid stocks, I don't worry about anything. Material non-public information does not exist. if you're trading the S&Ps or anything else like that, there's no such thing as material non-public information. If you're trading, maybe some no-name stock that barely trades, and there could be, but I don't think about the world in those terms. I can't think about things in the sense of, do I worry about fraud? The answer is no.
I guess someone said she's referring maybe to dark pools.
Oh, well, dark pools are different. Dark pools don't mean anything to me. Retail investors don't participate in dark pools. It's very rare. And it's mostly the high frequency firms that are just consolidating order flow, or the institutions. Dark pools don't impact anything that we do.
She said, thank you very much. Lisa, you know what I love about Lisa? And there's certain names that stand out, like the people that ask questions that are always looking to grow and move the calls and stimulate you to give an answer that maybe you weren't even thinking about. It's good. I like it. Yeah.
The term dark pool just sounds like, it sounds a little like it's got this aspect of criminality to it.
Stephanie, I forgot her last name. She used to live near me. She was like, she got that big going. She moved to Vegas.
But there are definitely, it sounds just a little ominous and stuff, but the reality of dark pools are they serve a purpose. They allow for matching, off exchanges, and then everything actually gets printed on the exchange eventually. So they're fine, but it doesn't impact retail investors at all.
Tom, I mean, this was great today. I love when we I love that we never have a top, like we kind of just go and see where the road takes us.
Sure.
And sometimes we end up reviewing some stuff we've learned because we always have new listeners, but this time we really went down a new road, and people seem to respond really well. And even learning about the different new ways of charting, I never knew. I've been on this platform for quite some time, and I never knew you could chart the options just by right clicking. But also the idea for getting the list and the IV rank. It's just, we covered a lot. This was really, really good, really helpful. It really helps us benefit. So thank you so much for doing this. And for everyone who asked if we have a recording, we of course have a recording, and we'll do it again next month and see where that road takes us. And in the meantime, Tom will be traveling a lot, and maybe I'll get to go to dinner with him again, and he can repeat the order. But I can't thank you enough. I love these, truly, and more than anything, you made me a better trader, which is
I love doing these, and I think I appreciate everybody being on and hanging out in the afternoon late. And so it's just it's great. As much as you like them, I love them too. So of course I'll do as many as you want. Hope we do these forever.
Me too.
Thanks everybody, and thanks Adam.
Bye, Tom.
Bye.